Good afternoon and welcome to the Spreadex market report for the 9th of March. The quandary of Greece and the constant default cloud seems to have been lifted for the time being. As Germany finally ran out of patience with the debt-laden country, Greece said Friday morning that 95.7% of bondholders will partake in the debt swap after once again pushing their luck by holding out for an extra day until the government announced this news. These have been viewed as very positive results by both economists and traders, which should enable Greece to move forward with its economic reform programme. The euro was seen to strengthen Friday morning by 50 points to 1.322. The pressure now turns to Spain. The country's decision to set a softer deficit target of 4.4% rather than 5.8% for 2012 has resulted in a standoff with Brussels. Spanish services reported to be in a period of greater contraction this week and hitting the agreed target would cut domestic demand by 4%, further squeezing the already shrinking economy. For Germany and the ECB, these budget agreements are paramount to the future of the Eurozone. As such, this predicament has left the Commission open to the problem of how they preserve their credibility of enforcing tighter fiscal rules without causing a similar downward economic spiral as Greece. Fourth quarter euro area GDP was confirmed at minus 0.3% as the European Union's Rehn stated that the euro area was entering a mild recession, a situation echoed by the Bank of France, who estimates flat GDP change for Q1 for France. Russian elections were concluded with victory for Vladimir Putin, who will now serve his third term in office. The result is contested by the League of Voters, who cites major irregularities in the way the results were compiled. But the former EGB spy will return to the Kremlin 4 years after the end of his last reign for another 6-year term. In America, Super Tuesday took centre stage, with 11 states and 400 of the 1,144 delegates up for grabs. Mitt Romney came out on top with 5 state victories. However, there still does not appear one front runner to take up the baton to run for the Republicans and oppose Obama in the approaching elections. On an economic note, data was positive, with unemployment claims remaining around the 350,000 level and manufacturing expanding quicker than expected. In equities, there were a number of results from a number of different sectors. In the mining sector, both Glencore and Petrofac reported solid end-of-year showings. BP finally came to a $7.5 billion settlement with businesses for the Gulf of Mexico. This news was seen as a positive, with the stock price opening up Monday 10 points higher. Morrisons, long seen as the poor relation in the retailer sector, reported promising results, a 7% increase in turnover and an increase in the dividend of 11%. The group, though, admit that 2012 could be a difficult year, but are confident they can make further progress. Gulf Keystone, which sits on one of the largest oil fields in the Kurdistan region of Iraq, saw its stock price dramatically decline Tuesday because it seems the giant reserve is too big for the company to handle alone. After ExxonMobil signed agreements for 6 blocks in the region in November, GKP's stock soared on the expectation the oil giant would acquire companies already active in the region. However, sales of the stock intensified this week after it was revealed that the American giant had requested for more time to decide whether to pursue with plans in Kurdistan. This weekend sees the American clocks change to daylight savings, so markets will open and close an hour earlier. Figures to look out for are the German economic sentiment and US retail sales on Tuesday, UK claimant count change on Wednesday, US PPI and unemployment claims on Thursday, and inflation data on Friday. Companies that are reporting include the IG Group, Antofagasta, Prudential, SIG, Yule Cato, and the Legal & General Group.